This is Stock Talk, and today is May 10th at 4:29 p.m. Eastern Time. Yesterday was just a huge, kind of messy day. I tried to upload the video. I think I tried to upload it like 7 times, and I had my account info on there and all that stuff. So I was just trying to get it all done, and in the end, I even woke up at 5 a.m. today. Okay, so it didn't work. Okay, but today, we are going to tackle all of the tickers. Now, this doesn't happen all the time, but we're going to tackle all the tickers that you guys called out up until now. So I hope I grabbed all of them. Let's start looking at the markets on the 180-day chart using the Think or Swim platform. This is the ticker SPY, which tracks the S&P 500, which I use to track general market movement. Note that we have been making a lower high on the 180-day chart. Now, take a look at this. We talked about this circular area, which is supposed to act as a resistance. This should be a very strong resistance because this is the 1 year or 180-day overall bearish trend, such that if we do break this trend, we can see a bullish spike even further, and that we could possibly see a reversal. So looking at the 180-day chart, we actually today broke over the magical number of 271. As a matter of fact, we closed around 271 to 272. So again, the resistance area is still fluctuating. It might be around 271, it might be around 272, so which is why we kind of closed right at the resistance area, not a big surprise. Looking at the 1 year chart, we are seeing something much more promising for the markets. The reason for the 1 year chart is look how we went up. We didn't go up gradually. We didn't close here and then we opened a little lower and then close a little higher. That didn't happen. What happened? We gapped up on the 1 year chart. This is showing a bullish signal for the markets. All right. So this is what I'm seeing right now on the 1 year chart. Of course, we're looking at a more bullish signal for the markets. On the 3 year chart, we are still seeing this candle, right? This candle has not fully formed. Of course, on the 3 year chart, we're looking at weekly open and closes, so that we still have a potential to come down. And should this bearish pattern, this is a bear flag pattern, start in place, right, we would see another leg down to the downside. So again, the 3 year chart still kind of shows a potential bearish pattern. The 1 year chart and the 180-day charts are showing significantly better signs for the markets. So what am I looking for in the near future for SPY? Well, you guys can see that we did hit resistance and we went slightly over the resistance right now. And look at this long tail candle that was made today. It retested that resistance as a possible new support. This is why the 180-day and the 1 year charts are showing a more bullish signal. So if SPY inevitably, right, will have to retest 270, 271 area, because that's the area where we know that this is the resistance. So we can see some fluctuations back down. We might see a long tail candle before we get pulled up should we see a bullish position on SPY. But today, everything looks promising. The circular area is playing out as expected. Obviously, it's a little later than we expected. We actually expected the circular area to be around this time, but note that we were still coming down, and we kind of had to breathe at the 20 EMA. You guys see that? We had to breathe at the 20 EMA before going up. And so it's looking pretty good for the markets right now. Looking at TQQQ, which tracks NASDAQ, I think you guys were asking about a fresh new look for TQQQ. So this one is obviously something of more attention because as SPY manages to push up, we do expect NASDAQ and TQQQ to push up as well. So currently we are at 166.51. Where are we looking in to buy into the markets? Should we go long, and should this be a bullish signal? Well, remember on SPY, we talked about a retest of the 270 to 271 area. We need the tail candle to retest that area, at which point you guys can take a position on TQQQ, right? When it starts pushing up from the bottom. Let's say it falls to 270, theoretically speaking, on SPY, and it starts pushing higher. That's when you can take a position on TQQQ. Obviously, these are not like recommendations or any. I mean, these are just general ideas or facts or opinions that I'm showing you guys. Of course, the end decision is all by yourself because it is your money and you guys see the pattern. Hopefully I help you identify that pattern so that you guys can get into a better position at least. So TQQQ, should you start going in, let's say it dips to around 160. Okay, let's be a little conservative. Let's say 162. It starts dipping $4. At that point, you can take a position and say that should it start going under the 20 EMA, this is where my stop loss will be. Again, reference that to SPY before you take that position. Obviously, this is a very bullish sign. We managed to pull over the 200 SMA significantly. We re-identified the 20 EMA as a support, and we pulled over the previous resistance. The next resistance, again, is at the breakdown area, which we're pretty much at right now. Are we going to take a bet that the markets will surge up again tomorrow on Friday? Let's not take that bet. Let's let market retest that support area, should it be a new support, and then go into TQ. You guys can get into, my point is, you guys can get into a better position on TQQQ than 166.45. If it keeps going up, all right, well, then at least we didn't take the risk, right? There's still a percentage risk that's involved in this position. Okay, looking at TVIX, which tracks volatility. We talked about volatility having a support at $6.76. Obviously, as markets pulled higher, we dropped lower. Remember in the last few videos, we talked about how this generally markets tend to be more bullish, right? So if you guys entered a position at around 676, around this point, right? I wouldn't really fault you for it, but you guys should have identified that, right, that your stop loss has to be around 649 or 650. Why that area? It's because you guys can see that at this area, none of the candles went under that support, such that if it broke that support, you can reasonably assume that the volatility will keep dropping. So you guys can see that volatility is continuously dropping because we fell below the support. So again, just follow the trend, wait for a good entry onto SPY, TQQQ, whatever you guys like to invest in. Yeah, so let's talk about commodities, because this is showing another very interesting pattern. So much development has happened. Crude oil, we identified a previous support around 69.34. We identified a resistance, which is now functioning as the new support at 70.83. Keep those numbers in mind. Now, I want to show you guys one thing. We've drawn this in, and this has been there in the past video, right? This line has been in the past video. We haven't really done it. I don't change these lines. These lines don't magically pop up. So look at this candle. Look at this day. I don't think this was earlier this week, right? Or last week? This was May 8th. Yeah, it was earlier this week. Major red candle followed by a massive green candle that matches almost its magnitude. What does that mean? The markets, or crude oil, tested its support. Is it going to go down? This was a massive confirmation that we are still on the uptrend. Look how much we pulled down on that day. We pulled down pretty much to its previous support, and we pulled all the way up above this support. This was a good confirmation that we're on the uptrend. Once again, this is a good confirmation that this is a support once again, right? Again, crude oil continuously has become bullish. It is still bullish. Nothing has changed. Again, looking at the 1 year chart, look at this candle. This is a very beautiful candle. Look at this, guys. On the 20 EMA, which is the light blue line, we've bounced off of it. We retested the 20 EMA. There's the confirmation. Keeps going higher. What are we going to expect for crude oil? Well, crude oil follows the ticker GUSH, or GUSH. So again, I know GUSH kind of looks a little lopsided right now, and it's for good reason, right? We talked about GUSH having a resistance on the 180-day chart around $36. Look what happened when we went over $36. We managed to gap up pre-market, aftermarket, pre-market, and such that we're making new highs. So I want to show you guys the 3-year trend, because this is the trend that we have been looking the entire time. GUSH has been making lower highs until now. So we realized that there was a resistance around 33.49, 33.50, and that look what happened. When we crossed this resistance, we gapped up, and now we're holding over this support. What does that mean for crude oil? That just means we've broken over the 3-year resistance. We've broken over the gap down area. It's just more potential for crude oil. There's more potential for GUSH right now. So GUSH is currently at $38. We've talked about the potential for 34, 35, 36. Now we're looking at 39, 40, 41. These are all numbers definitely, certainly in play right now. Certainly numbers that we can reach given its bullish trend. All right, let's take a look at /GC looking at gold futures. So let's look at gold on the 180-day chart. We've talked about gold having a bullish position on gold. And the reason why we talked about bullish positions is we have identified a support around 1312. Look at this consolidation pattern at the support. Once again, look at this verification right here that you guys see these candles on the 180-day chart? This was pretty much at the support, and this was a verification, pull down, pull back up, that we're still on the uptrend, or we're going to go on the uptrend for gold. And gold follows JNUG. Again, this was a very nice buying point. I wish I posted my video yesterday because I talked about gold, which was the same thing. Well, you guys can reference, 2 days ago, the video 2 days ago, I talked about gold having a bullish position, and this has not changed, right? So GC follows the ticker JNUG. They all follow gold, which is bullish for gold. Looking at JNUG, we talked about how there was potential to reach around $16.30. And because gold was at a support and JNUG held above its previous low. Think about that. If gold futures were at its support and JNUG managed to hold over its major support areas, that just means that JNUG has higher prices to come, as /GC has a lot of ground to make up. If /GC just goes up a little bit from the support, you can imagine how JNUG starts trending higher. The potential is certainly there for JNUG. It is certainly still there for JNUG in my opinion, and I still see potential for it to cross this $16.30 given what the futures are telling us. Looking at lastly is /natural gas. /natural gas I think is something that we talked about as well. We identified a higher low right on the graph. You guys can see that on the chart. We've been making a higher low. We said that it tested the support multiple times, once, twice, 3 times, actually tested it again today. Every time it has bounced up. That is a more pro for UGAZ, UGAZ. And we talked about this 2 days ago in that this was a very nice sign for natural gas. So let's take a look at UGAZ right now. And ask yourself, are we going to buy into this point right now? So looking at natural gas, we're pretty much, let's just extend this to the right, in that we are pretty much at a resistance area. Are we going to go into DGAZ right now? Right? This is a question. Think about it. So one thing is, let's wait for some candles to come down at least. Right now, we're obviously on an uptrend. Let's see it to come down. At that point, we can take a DGAZ position. But right now, we're not going to take a UGAZ position because we're at a resistance. We're not going to go into DGAZ right now because we don't have a confirmation of a reversal just yet. Of course, if you guys manage to push higher and keep above this support in the next week, then we look for an entry point into UGAZ, which tells us natural gas has higher prices to come. So again, I want to ask yourself this question. We're looking at all these ETFs. In terms of the confidence level, which ETF are you the most confident in? What about the next one? And what about the last one? So I'll tell you. First is crude oil. The pattern is very predictable. We know crude oil is bullish. This is followed by gold, right? Gold, we have nice entry points followed by natural gas. Because natural gas, once again, if you guys didn't catch the UGAZ train today, then, right, we're again not sure where we're going to take a position. So that would be the order of which I would look for a position right now. Let's go through all of your tickers, but before we talk about all of your tickers, I want to revisit one of the tickers that you guys called out, which was RTRX. Okay, RTRX has a very identified support around 2309. It's been making higher lows. Keep that in mind. Now, look what happened today. It went down 4.79%. So, what are we looking for? So, we know that it has the potential. Look at it. It hit the 20 EMA. It kept going higher, right? It kept going higher. It has the potential to hit $28. Certainly, it has the potential. Okay, so why not 28.66? Ask yourself. Well, there's the resistance line. So I tend to be a little more conservative in terms of my trades. So I would like to just kind of sell at the previous peak, which is around $28. That's just a conservative way, just in case when it does start falling, I don't want to be caught in that area. So where's a good buying point? Here's the 20 EMA. We're looking for a bounce off the 20 EMA, looking for an entry position around 25.46. And if you guys do get in around this, or 25.64, you guys can take a look at maybe a 6% profit. Where's your stop loss? Well, your stop loss will be around 3% lower below the 20. So of course, it's trending higher. If it does that, it's trending higher tomorrow. And then you buy when it's trending higher, and then you set your stop loss around 3%. Lower, not 30%, 3% lower, right? So that would be my potential entry or exit points. So that's RTRX. Good call out. I really like that one. Let's look at TDOC. So yeah, TDOC, I like this trend in such that it's been on an uptrend. Look at all these lines, right? All these lines are pointing upwards. We're on an uptrend, but are we going to buy in right now? So at the 180-day high, we pretty much met it today. We're not going to buy in at the 180 high. Look at right here, right? Are you guys going to buy in at the peak? Buy in at the peak? Buy in at the peak? Right? No, not yet. So where's a good time to buy? If I could show you this chart. Well, looking at this chart, we know that it's certainly bounced off of the green lines, which is the 150 SMA line. So yes, there's certainly potential for it to come down. Whether it comes down to the 150 or the blue line, it's certainly a more better price if you buy in around $42, $43 than $47. So again, wait for it to come down. I do like this trend before buying in. Good call out. I want to show you guys another trend. This is WDC. This is something that I'm calling out for you guys. Again, this is all just patterns that I see. You guys obviously don't have to take a position, but WTC has been making this lower low. I certainly don't really like that trend, but however, you guys can see that every time it's hit this area or the support point, it started coming back up. Look how much we've fallen. Well, WDC is Western Digital. We've fallen quite a bit, and this was partially propagated by this earnings report. Because we're at this level, Western Digital has certainly a lot of room to make up. Look at this, right? If we just cross to here, it's already 10 to 12%. We're not going to talk about this peak. Let's just say that's not reachable right now. Let's be conservative, right? 10 to 12%. So you guys buy in now and set your stop loss where? Well, back under the support, right? Around 4%. So obviously, if you guys bought in earlier, you would have had a better entry position. So again, this is something to look forward to if you were to look for a position. Okay, LABD, I think you guys were talking about this one. So LABD, which is the inverse of LABU, has had a support around $30.70. Okay? Look how we're bouncing off the support again. So the one thing I want to just be a little careful on this one is LABU, you know, it doesn't always happen, but as markets push higher, LABU has a potential to push higher, not LABD. So even though the markets pushed higher, LABD pushed a little higher today, it's just a little more dangerous to me. Of course, again, like I said, we are at a support area, but this is just, my confidence level isn't high enough so that I would go into a position right now, especially when we've gone up 2.44% today. Like the percentage gain, maybe 6%, but I would be much more comfortable taking an LABU position if or when LABD does cross to this area. Just think about it, right? You guys would be much more comfortable taking an LABU position if SPY does, markets does keep going higher. So, yeah, so this is a nice trend. Again, just thinking about the overall market positions, not right now. MU is something that I feel like a lot of you guys have called out. I keep hearing MU for some reason, and this is a pretty interesting pattern because we talked about this on the 180-day chart, making a lower high each time, and look, we broke over this resistance area and it's kept going higher. So there's actually a couple of things why, even though we're on an uptrend, I'm not very confident in this position. So the first thing is, looking at the bottom, we kind of did a double bottom here, but I wanted a more significant test. Yes, look, we tested this area, but because we've dropped so much, we never had another significant test. And I feel like at some point, this one might, it might come down, and look how overextended over the 20 EMA we are. Again, this one is just not in my confidence level, even though we are pulling higher, that we are, coming, like if we do pull to the 20 EMA and we start bouncing off of that, I can see that as a potential buy-in. But just right now, like if you guys were to ask me, am I going to put in my money at $52.66? Probably not right now, because it's so overextended. We didn't really have a retest. Let me just look at the 1 year chart really quick. Yeah, so you guys, well, this looks a little better, right? And such that it gapped up. But once again, just looking at, yeah, I'm just not too confident with this one. But I think if you guys, it comes down to the 20 EMA, you might have a little chance on this one. ZAGG. ZAGG, I actually talked about these tickers yesterday in yesterday's video, but it wasn't posted. So ZAGG has been making this trend, right? Predictable trend, downtrend until earnings came up. Note that earnings propagated this catalyst 20+% higher. It went 20+% higher, which means it has the potential to sell on news and go 10%, 15% lower. Of course, it can still go higher. Yeah, certainly. But is this something to go into? Looking at the volume, right? Looking at the daily volume, we see a surge, massive surge up on the day of earnings. But then before these earnings, we have volume around 100,000, 200,000, 400,000. Right? So again, this is not something I would look into buying, especially given this, this surge up. This is not something very appetizing to go into. I like this uptrend. If you guys were investing in this uptrend, I like this trend. I like to short sell on this downtrend because it's predictable, but when it starts doing something like this, I don't like it anymore, especially given the volume. So, okay, Macy's. So take a look at my videos 1 week ago, 2 weeks ago. We talked about Macy's. What did we say about Macy's? So if you guys are new, I think welcome to the channel. Thank you very much for watching these videos. I think you're new, you're learning the process, you're seeing the trends that I'm seeing. If you are returning to these videos and you've seen what I've talked about for Macy's, we talked about resistance areas, right? Look what happens when resistance areas have been broken for Macy's at 2663. It's gone significantly higher, but then it came down. So when it broke over this resistance, a lot of people were asking me, should I start taking a position because it's broken over the resistance? And I told you guys, I wouldn't take a position even if it starts trending higher, because you guys can see past trends. It's temporary. Doesn't mean but the chance of it being temporary is still higher. Where did we say was a good entry point? The 200 SMA, right? Macy's at the 200 SMA is a good entry point. Note that we bounced here, we bounced here, we attempted to bounce here, didn't work. Now, what's the predominant trend? earnings are coming up in a few days next week. We're definitely not going to take a chance with earnings, right? That's number one. And number two, we've broken under the 200 SMA. Now this trend is predominant. Look at that. We rejected by the 20 EMA. We might get rejected by the 20 EMA. This might occur or is horizontal action before earnings. So let's not take a chance on this one. Let's just watch and see what happens and learn from this pattern. But certainly, I hope you guys didn't get in around this area because that was extremely risky at that time. All right, moving on. Getting right along. Whoa. CRZO. Okay, CRZO, which is an oil gas. I think, yeah, one of you guys messaged me in terms of like you guys made a ton of money on this one. Yeah, so it looks like earnings kind of pulled it up and now it's going even higher. So this probably follows something like GUSH and Forest Steel as well. I'm not too certain of the company's trajectory, but looking at this, we're making a 1-year high. Are we going to get in right now? No, right? For new entry positions, we certainly don't want to go into this position because our potential for profit is we don't even know. But the potential for loss can be massive because it's so overextended. But for people who are already in this stock, they're just riding the wave, right? It's a comfortable ride because all they see is uptrend. All they see is just gapping up. Why should I release my shares now? So again, this is something that if you're in it, I think you're good. But if you're not in it, there's certainly better positions to go into to be more patient in. So very good call out. I like this one. Good job. UAN. UAN is CVR Partners. Yeah, so you guys see this choppiness pattern, and now we're on what kind of trend? A downtrend, right? So this one is on a downtrend. So we just want to be a little careful because, again, our potential for profit, not bad, a 7%, but the potential for loss, look at that, right? If we just set it under this area, the support area, it's still 7%. That's not a good risk to reward ratio, certainly not 1-to-1. Not right now, especially when we're on a downtrend. You guys can see that when earnings came up, kind of kept going down, and now we just managed to pull over the 20. It's just not much profit for me at this time. So this is not something I would go into right now. Let's look at the 1-year trend really quick. Yeah, you guys see that? Still on the downtrend. So yeah, not right now for that one. TSM. So TSM, whoa, what happened here? So earnings came down and now, yeah, so looking at this one, I don't really like this trend as well. Look how much earnings moved this stock, right? It gapped down so much, it found a support, and this support can't really be identified. Maybe here when we started gapping up, that was a support. But you guys can see that how difficult, how less predictable this pattern is. And when it's less predictable, I certainly don't want to take a chance. Yes, it's been going up the past few days. Look at the 180-day chart. We have started going up, but ask yourself, is this a support? If I asked you whether this is a support, how many different evidences can you give me in such that you would establish that this is a good support? So the only evidence is probably like a gap up area around here, and that's pretty much it. And I don't really like that. It's just not much information, not enough information for me to identify a good exit point or a good entry point for TSM, even though it is on the short-term uptrend, long-term downtrend, right? All right, any others? CRC, I think that's another one. Did we go over this one? Okay, CRC, let's take a look at the 1-year trend. Right, looking at the 1-year trend, look how overextended we are right now. Certainly has potential to pull up, right? You guys can see that we met a red candle followed by a nice green candle. What happened during earnings? So earnings came out, we started gapping up. So yeah, what are we waiting for this one? If this one is still bullish, right? CRC, we're waiting for it to come down to the 20 EMA or do some sideways consolidation until the 20 EMA starts catching up a little closer. Then we can have a potential to buy in, know where our stop loss is. Right now, it's just too risky to invest around this area. And again, I'm not relying on the 180 day for this one. I'm more relying on the 1 year trend, just because on the 180 day, you might be like, oh, we're consolidating at this area. But right, in fact, we might be at a resistance around $34, right, guys? So this is why I don't want to take a position at CRC right now, just because we're so high up, right? Where's the resistance? Right, so high up, we can't even identify resistance. Exactly. Okay, so yeah, you can, right? This is not something, not right now. LRCX. Okay, so LRCX. Yeah, so I feel like some of these tickers are playing to similar trends. You guys see that? See this? See this pattern? It doesn't mean that it'll come down right now, but certainly this is making lower lows and lower highs on the 180-day trend. We did, yes, break above it today, but let's take a look at this one. It's actually not too bad. So, wow, we actually broke above it. That's actually looking pretty good. So look at when we started breaking above, right? When we started breaking above, we had to retest at some point the light blue line, which is the 20 EMA. So again, I want it to come down to the 20 EMA, start pushing back up, find a good entry position. So where's a good entry position for this one? Probably around $200 as it goes down and starts pushing back up. And you guys can see that every time it does do a more bullish trend, it does start going up quite significantly, such as right here. So this is something to watch because this is, again, a more reversal pattern. Reversals are more harder to tune out because we're not at a, this is not like a, this could be a support, but like it's on a downtrend, lower highs, lower lows. Is this a reversal area? Again, it's questionable, but I'd like to see a couple of more pieces to pull together to the puzzle before going in. So good call out. I like the pattern. I think that's it. So once again, thank you guys, everyone, for watching this video. Thank you, everyone, for submitting these awesome tickers. I feel like these tickers, even though they're different, you know, they're different tickers, they're different patterns, but right, we're learning from these patterns, these technical analysis, and seeing which stocks are we should go into, which ETFs we shouldn't go into. And I hope that you guys are all learning, whether you're new or you're returning and viewing at this, you know, on my channel. Thank you, everyone, for watching, liking, subscribing to the channel, and I will see you guys on Sunday. We'll see what the markets do tomorrow. Again, SPY, a very interesting day coming up tomorrow, seeing what it does. I'm expecting it for it to test the 270, 271 area and get it pulled higher, given this bullish momentum today. But we'll see tomorrow. Another very interesting day. Happy trading, and yeah, see you guys later.